Hello and welcome to the FXTG Educational Webinar. We're not about a couple of seconds away. Okay guys, welcome to the FXTG Educational Webinar. My name is DiNapoli and I'll go through a few, just a general advice disclaimer that I have to read to you guys and also for the people that are on the phone here. Okay, so this presentation is aimed to be educational in nature. And it should not be solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant markets, the rules and application of these rules to the strategies you are trading, the products and the full extent of your exposure to risk of financial loss. If you're in any doubt, you should seek professional advice. The advice contained in our site has been prepared without taking account of the objectives, financial situations or needs of any particular client, and because of that, the client should, before acting on the advice, consider the appropriateness of the advice, having regard to the client objectives, financial situation and needs. And you should know that ForexTG clients are required to read all product disclosure statements, 3 in total. So before I begin, is there anything in particular anyone wants to discuss or wants me to look into, or they're not understanding anything prior to beginning the webinar? That way we can go cover these topics first. You can just type in the chat box there. Welcome back, thank you. Nothing in particular, indicators or anything? Okay, we'll proceed. Why listen to me? I'm a member of the Many Forex Society and have been trading the markets over 11 years. Trade with many professional traders and firms like Bank of America, Merrill Lynch, IWF Portfolio Services, which is in Australia, National Australia Bank, which is an Australian bank as well. This is my 12th year as a trader now. Don't know when I started trading. I know it was in 2000, and we're in 2012 now, so maybe 11 and a half to 12 years. I've been trading privately as well. I've taken lessons from these people and from various banks, and I've been able to piece together some constantly profitable strategies. You guys asked for these webinars. That's why it's one of the reasons why I do it. I have a gift for teaching and tuitioning people. I love helping and teaching people and have had a great success teaching and tuitioning people in various ways throughout my life. So today we're going to talk about pivots, live trading orders and current market conditions. So we'll discuss what's happening in the market now. If you guys have any questions, it's always open to discussion. And we should fly through this quite easy. And just out of experience, what is your experience level in the market? Are you a beginner, intermediate, experienced, professional? If you don't mind me typing in there, that way I know what to target. If you type in the chat box, beginner, Mark's a beginner. Okay. Some experience. Fantastic. Professional. Fantastic. Great. Okay, so we're going to talk about pivots and trading. So Standard PP stands for a pivot point, S stands for a support and pivot point, S stands for a support, R stands for resistance. So we got resistance levels, pivot points, and S1, which means my chart's just disappeared. Give me a sec. That's the wrong webinar. Here it is. So we've got these are support levels. So currently, as we look at this chart here, you can see that the support level is trading on S1, which is support. R1 is a resistance. Simple terms means if the current price breaks a resistance level, we're going to see further increase. If it breaks a support level, we're going to see a decrease. Not always the case. Sometimes it can bounce off these levels, but these are good levels to trade in between during these market conditions. Does anyone have any questions in regards to pivots and trading? I'm going to put some live orders using some pivots and trading later on, and we'll see how we go. Okay, so here it is. We got, as you can see over here, we've got pound USD. We've also it's a buy above the S1, which is support 1. So, and then it's got a support 2 line there in the red on the bottom there. We can see that this is the targets, which is the pivot point line, and I'll show you guys how to. There's actually a method of calculating a pivot, and there's actually a method of calculating support and support 2 and R1, and I'll actually show you guys how to. I'm not going to show you how to calculate it professionally I'm going to show you how I use a quick method of finding a resistance and support lines. I don't rely too much on pivots, but I do rely on resistance and support ones. There's up to 3 support lines. So we've got support 1, support 2, support 3. We've also got resistance 1, resistance 2, and resistance 3 that I'm happy to go through and do some live trading and show you guys how these targets actually work. So as you can see here, that's the S1, the support 2, the resistance 1, and the pivot. Okay, so this is a calculation if you guys want to note it down. A pivot point, a high plus low plus close equals 3. Support resistance levels are then calculated off the pivot point, like so. Now, I'm not going to concentrate too much on this. This is just for your reference. If you want to write it down, I'll leave it there for 30 seconds because I want to show you an easier way that I use, that doing it on a live chart, that can show you how to do these kind of calculations without even pulling out a calculator. So I'm going to quickly show you guys how I do it. First of all, I use a 15-minute chart. So this is MetaTrader 4 that FXTG has. I click on the 15-minute chart and we can see a price here. Let's go to pound USD on a 15-minute chart. Okay. So as you can see, this nice sell-off over here. I'll draw it up for you guys. This is prior. This has occurred prior to the Bank of England releasing an interest rate. So people were bearish. So they are actually selling off on it. So as you can see this here. And as I use to calculate my support and resistance lines, let's pretend none of this actually occurred yet. Okay? So we pretend none of that actually occurred. So what we do is, over here, if the price was around this level here, okay, prior to any of this future occurring yet, what we would have done, we would have had to draw some lines. And the lines we would have drawn would have been a resistance line, which would have been here. That was the last high. A support line, which is on the last low. So the top line I would have named as resistance 1. This line I would have named as support 1. As you can see that this here has broken, and it broke past the resistance line, the support line, which therefore has made a decrease. So 70% of the time when you see this happen, you know that it's going to be a short position or a long position if it breaks the resistance line or if it breaks the support line. Okay? And we can see it now, currently happening. Right now we can see it on this sell-off right here. It's broken another one, and you can actually see that it is in line. You can actually see that this is in line with this right here, and it's broken it. So a short position should have been placed in these moments. Not telling you guys to actually go in short now. I haven't actually analysed the full extent, but by looking at it, I would probably do a short position on it. Obviously not a recommendation from me. Another form of identifying trends that I use is quite simple. Let's I right click on my chart. I go to DiNapoli, which brings up all these indicators and things that look quite weird. And what I do is I delete everything I see here by right clicking delete. I delete all these templates. I delete everything. Okay. Double click on the yellow one, and I can delete this too. And what I do, guys, is I put some indicators that I've created on the 15-minute chart. I make sure it's on the 15-minute chart on the top there, top left. What I do is I put a few indicators such as a moving average. Okay, I change it to 9. And then I put another moving average and I change it to 20. Okay. And what I do with these two indicators, I actually change one of the color to a different color, not to confuse myself. I've actually saved it as a template, but I've made it as closed. I selected the option closed. That's why it's gone closer to the chart as well. So what I do with this chart is when I see the blue line cross over the yellow line on the downtrend, as we can see here, I go in a short position. When I see the blue line cross over, it's a long position. However, I don't go in long if I see this here. If you see this volume here, you actually got to add volume, guys. I didn't show you how to do that, but I will quickly show you now. To add volume, you just right click and go to volume. Okay? So right click, go to volume, and it adds on the volume. If you do see these types of movements, a flat market, I don't enter because that's what's going to occur. You can't make any points in there. And I stick to a general rule of thumb. Yeah, look, my recommendation would have made us a quick, good scalp. I stick to a general rule of thumb. I put a take profit of 12 pips, and I put a stop loss of approximately 40 pips. Okay, I usually say 35 plus spread. So 35 plus spread. And I trade those types of orders. I try not to trade. Trying to use this method during the news release, it will go against you. You can use it prior to news release, half an hour beforehand. That's fine. But try not to use it during the news release. Does anyone have any questions in regards to these moving averages that I've put in place, that I've provided as a strategy? I've used 21 previously. Yeah, I used 21. 21, 22 on a 15-minute chart's fine. Can we have that emailed to us? What would you like emailed to you, Peter? Just waiting for Peter to type in the chat box. Look at my nice little short position. That would have been great. Nice little move. Okay. The calculation page you put up earlier. Yeah, sure. I'll get who is your account manager that invited you into the webinar? Davide, Regan, Marjan, Ben, Maureen. Regan, no worries. I'll make a note of that. I'll get Regan to send you the calculations of this. I'll actually be posting this webinar up on YouTube, so you guys can actually access it on YouTube, and you'll be able to see it again. I'll be posting it up within the next 2 days. There's actually an FXTG web page that we can post it up, and you can see it all there. But I'll make sure that Regan emails it to you. Not a problem, Mark. Okay, so there's some of the indicators that I would use. I'll use a moving average. I'll also use an indicator called a MACD. If you guys, obviously you guys would have heard of MACD. Well, it's pretty simple. There's a MACD. Not a good MACD, but as you can see here, it's pretty good. I usually go against the MACD. If I see it already on the low, I wouldn't short. When I see it up high and it hasn't crossed before zero, then I usually do go short. But that's irrelevant for this type of strategy. But it's an indicator that I use. Another good indicator to use is actually called the Relative Strength Index, an RSI. And how the RSI works is it tells you if it's overbought or oversold. The higher it is, it's overbought. The lower it is, it's oversold. So that's another indicator you can use in junction with this kind of method. Now, I've saved this template as a Stavro, or guys, there's another one. I've actually saved it as Stavro. And I'm going to do some live trading with it now to see how it works. Okay, I can see that this has gone. Let's go put an order in. We'll put 8 lots. We'll buy at market. Done. Pound US. Let's do a pound USD. Let's do a short. Let's see how our methods work. USD Swiss franc we've done that one. USD JPY. Not a fan of the USD JPY at the moment. For sentiment and news trading, I think it's quite good. For swing trading, I don't think it's quite attractive yet. It looks like it's about to go to a long position, so we're going to take a speculation buy on this. So we're going to diversify ourselves slightly. Euro USD is going to a short position, so we'll put a short order on. Okay. Now, as I said, every single one of these orders, we're going to put a 12 pip. We're going to put a 12 pip stop loss on. Take profit, 12 pips, and I'll put a 40 pip. We'll see how we go. So 12 pips, 40 pips, 12 pips, 40 pips. I would usually calculate it from the order price I got in, but just for this project I'm just doing a quick one. So there we can see our stop loss orders. We can see our take profits. So we've got it all there. Does anyone have any questions in regard to this strategy? Obviously we're down so far. We just opened up the positions. You're always going to be down. This is just a clear example. We just want to show you how it works. Obviously, if it came to a market condition in a real trade, obviously this is a demo account. I'll be putting a bit more thought into it. I wouldn't just, I'd wait for the crossover. When I mean crossover, this is what I would actually wait for. I'd wait for this crossover to occur, and I'd wait for the next candle to appear, and then I'd go with that trend. So I'll give you another example of that. So the pound USD here. Let's zoom in a bit. So the pound USD here. I'd wait for this crossover to occur, which is just about to occur. And then I would wait for the next candle to appear. So there it is, it's occurred, and I'd wait for the next candle. Any questions in regards to that? And next candle, because we're trading a 15-minute chart, it's going to actually take 15 minutes to pop up. So what you're seeing here is a price action within 15 minutes, each one of these. So that there is 30-minute action. You're surprised that I have a low take profit to a high stop loss. Why do you trade those numbers? Yeah, by doing that, I've got a better result in taking a take profit, which just happened then. As you can see, we've already made one take profit. Let's have a look at our account history. $400 right then. That was a take profit. Okay. So that's why, and as you can see, the green is here again. I put a high stop loss because I know that if it's going to hit my stop loss, it's going to hit my stop loss because it's a proper stop out. The chances of this strategy working if you do it correctly is around 78%. So I play the numbers game like an insurance company. They hire a lot of cars. They know that not everyone's going to have an accident. Only maybe 5% are going to have an accident. So I do a very similar strategy where I put a stop loss plus my spread, but my take profits are quicker. But I don't just buy one pair or two pair. I do it with a currency correlation. So I do it with a few. I do it with a few pairs, and I try to diversify that way. So I try to diversify that way. And what I mean by currency correlation, this is exactly what I mean. I'll show you guys now. 15-minute chart. Let's zoom out a bit. Okay, so that's a 15-minute chart. That's pound USD. This is the Euro USD. Okay. USD. Don't worry about that. Don't worry about that. USD Swiss franc. And this one is gold. We'll grab gold. Why not? Gold's good. So as you can see, currency correlation, what it means is you can see over here that pound USD has gone downtrend, gold's uptrend. Euro USD is downtrending, it's following pound. USD Swiss franc uptrend, it's gone the other way. Now what you're seeing at the market is something very unique. Usually that you can see that gold looks very similar to the euro, and so should the pound. Obviously this pound is quite different today because there's Bank of England interest rates due to come out. So that's going to be a bit different. That's what you're seeing at the moment. But what we're also seeing is that gold is uptrending while its coefficient pairs such as Euro USD, Pound USD, AUD USD are going the other way. I haven't actually looked at the AUD pair right now, and I haven't seen it all day today. But just looking at Pound USD and Euro USD and my experience in the markets, I would be saying that Australian dollar is on a downtrend too. And we can pull up a chart now and we can have a look, and if I'm wrong, well, I'm wrong, but I got a good feeling that I'm not. And if I'm wrong, I apologize. I'll give you guys a free webinar on a Saturday or something. Let's have a look. There we go. Downtrend just about to occur. So we'll put another short position in here. Okay. It hasn't crossed over. We should wait for the crossover, but obviously 15 minutes, the webinar, we'll probably be finished by the time they hit. So I just want to get into them now just to show you guys, and it's a demo account. We've got nothing really to lose on it. So, but I just wanted to show you guys. So here, let's do a modify order. Put 40 pip, 12 pip, done. That easy. And as you can see with the 40 pip stop loss here, guys, this is a very good example. I'm glad I actually looked at the AUDUSD. You can see that this is a resistance level. My 40 pips actually, I didn't mean to do that, but it's actually done a resistance level, which is pretty good. There's another method you can do to cover yourselves. I actually haven't told you this method before, or not many people know this method, but I do a special order method. It might be a bit complicated, but I'm going to show you guys, and I've got, just so you guys know that I'm not hiding anything from you. What I do is, if my stop loss was to get hit, I can put a special order just above here. So if we went short on this pair, okay, and it didn't hit our take profit target, and then it bounced against us, and we got stop lossed. It's hit our stop loss, so we got stopped out, and it keeps going up. It will then trigger another position here, which is my buy line. So I then switch to a long, and I put here only 8 pips take profit, because I don't think it's going to go higher than 12. So I put 8 pips take profit. So technically, I've my stop loss. I've averaged my stop loss. So if my stop loss was 40 pips, right, I've really lost 32 pips. Remember, you think, oh, you're doing that just to save 8 pips, but the thing is, I'm doing that as a strategy because, you know, you save 8 pips here, you save 8 pips there, you're making good pips. So the aim is collect as many pips as you can and save as many pips as you can too. Anyone have any other questions in regards to these methods? Does anyone want to speak to me in person and ask me a question? I can unmute you and you can ask in the meeting. Ask me a question. The thing about the markets these days is that a lot of people make the market more complicated than what it really is. It shouldn't be complicated. It should be quite easy and quite efficient the way you do things. I like to trade a system that is mechanical. This is mechanical trading, which means I don't let emotions get involved. And everything I do is mechanical. I'm like a car. You turn on the car drives. The same way with my strategy. I don't let emotions get involved. The moment you let emotions get involved, guys, you're in a whole different ball game. You're in a ball game and you're in a war zone. So try not to get emotions involved. Try to take everything professionally and try to do your business and conduct it professionally. Anyone have any other questions in regards to this strategy and indicators? Come on, guys. I'm sure there's going to be 1,000 things in your head. Don't be shy. This is your opportunity to ask me. I guess you mean if it hits strategy, support, resistance, the main one you use is... I don't quite understand that question. Is this strategy, support, resistance, the main... yeah, is this what I'm currently doing now, the main strategy I use? One of my main strategies, if I'm doing a swing trade, I would use it. Like, as you can see on this increase here, you know, you can say, oh, look, that person got in there, oh, he can get out here. But no, I'm only in it for 12 pips. So technically, I would have been in here, I would have been out here probably. So I'm trying to minimize myself as much exposure as I can. I don't try to overexpose myself. Because you never know what can happen here. What happens if Australia comes out saying some bad news and bang, this just flips? Don't just rely on charts, guys. Remember, the less time you can spend on the market and the lower the positions you're in, the better as a trader you can become. Doesn't mean you have to be on the market 24/7, but it does mean that you have to be diligent in your trading. Okay? It's like driving. The more you're going to drive on the road, you're going to have an accident one day. Might not be your fault, but you're going to have an accident one day. The less you drive on the road, the better it is for you. There's other strategies that I use. It just depends what kind of trading I'm going to do. I use a fundamental strategy when I'm trading news, a news release, and then I'm using all sorts of different indicators, which is a whole different topic. But swing trading, yeah, I would use this kind of type of strategy on a 15-minute chart or greater. A 15-minute chart or greater. As you can see, this is a 1-hour chart. On a 15-minute chart, this would have already crossed. Any other questions in regards to the trading indicators? Or anyone got any questions in regards to the current markets? I'll get Peter. I'll get Regan to send you that calculation sheet for you. Sorry, I'm just reading a question. Did you always use the 12 pip take profit, 40 pip stop loss with other strategies? Only on a 15-minute chart. And the reason why I only use it on a 15-minute chart is, as I said before, I don't want to be exposed for too long. And also, sometimes you see these little spikes here. That's price action. That there alone is, what's that? That is 10265. That's sorry guys, that was just a very bad lazy way of showing you. I should be using the crosshair. Okay, 10263. So let's say 10263, and that's 10272. Take away 10272. That's 9 pips. So we don't want to be caught in a position where we're gonna be struggling for pips. We want to be in a short amount of time and want to hit our take profit. This is what we want. That 400, how we hit it from the time that we entered. The time that we entered was 9:53, 9:56. So what's that, guys? 3 minutes. We made $400 in 3 minutes. I mean, that's what you want. You want to make quick bucks in low risk. Put in a 40 pip stop loss, we know we're not going to get hit. If I put a 12 pip stop loss and a 12 pip take profit, my stop loss can get hit. I'm on a 50-50 bet. If I put a greater stop loss, yes, I'm taking a greater risk in losing a greater amount. However, there's more of a chance that my stop loss, my take profit's going to get hit. My stop loss is there as a protection if I get hit. I'm not putting a stop loss to get hit. That's the difference. We don't want to put a stop loss to get hit. We want to put a stop loss for protection. Put in a tighter stop loss, well, you can do that. You can put a stop loss, instead of putting a 40 pip stop loss over here, what we can do is a smarter thing. We can put it over here because that's the resistance line we know it's going to break. You can do that to minimize your stop loss if you think it's a bit large. But I like to put 40 pips because I know that it's going to go past any resistance level. And if it does, then we can close it off. Any other questions? Have you traded currencies before, Peter, or shares or CFDs or anything like that, oil, commodities? Just waiting for Peter to write. Okay, maybe you didn't hear me. Okay, anyone have any other questions? And but not regularly. Okay, anyone want to have a chat with me in person? And I'll unmute you. That way you can ask me any questions, anything in particular. I don't mind. You can ask me what I'm doing tonight. I'm open for anything. You find that funny? You wanna? Whereabouts are you from, Mark? New Zealand? Okay. You like to have a quick chat? Okay. No worries. Okay, Peter. I've unmuted you. I can't hear you yet. Hold on, Pete. I've got to put my volume up. Give me a sec. Give me a sec, mate. I'm just I can't hear you. I've got to find where my volume button is. My volume tab. Won't be long. Okay, Peter. Yes, I can. Okay. Yep. Yes, sure. I'll get David there to send you. David is the account manager for everyone else there. I'll get David there to send you the webinar. It'll be a link that'll be on a YouTube page, and you can view the whole thing. We conduct these webinars weekly. We used to do them on a Wednesday. We usually get up 16 to 18 people in the room. I didn't expect the numbers to be too high today due to obviously being January and people just coming back from Christmas. Yeah, but I'll get him to send you the webinar, and he usually invites his clients that he has on his list that he wants to invite. So yeah, if you don't get an invite by let's say it's the same day, so Thursday, you can just give him a call and ask him for an invite, and he'll invite you. These the yellow and blue ones. Yeah, these are moving averages that I set on 21 and 9, and I just changed the color. I can quickly show you. What I do is I go to DiNapoli, which is a standard template. I use DiNapoli because I actually like the green and the red. The green meaning bullish, the red meaning bearish. And it's just nice and clear, so I delete everything that I see on it, just like that. And I delete every indicator, and then I add volumes. I right click and add volume. So I don't trade when I see this bearish line. I trade when I see these choppy or high volumes. I then go to moving average and add on a 9 and add on a 21. But obviously I change the color by just double clicking to whatever color I want, pretty in purple. And then yeah, and I save it. But no, that's how I've got that template saved to Stavro. But and it just makes it a bit easier. I use it on the 15-minute chart, and as I said, I put a stop loss of 40 pips or resistance you can have, and I put a take profit of 12 to minimize myself. Yeah, that's one of the reasons. Yeah, look, I'm 90% sure that next webinar I come back, I'll leave these trades here. Next webinar I come back, all these take profits will be hit. I'm 90% sure. Okay. Oh, it was nice having a chat with you, Peter. Ta. Is there anyone else there who would like to have a quick discussion with me, or have any questions if they don't want to talk, or they've got a cold, and they can chat in the chat box or something? Okay. Am I a millionaire? Do you think I am, Mark? Do you think do you think I'm a millionaire? I'm happy to answer that question. You cluttered up. I cluttered up in a way that I am a millionaire, or the way that I'm not a millionaire. Yeah, I know quite a bit. I'm not a millionaire from trading. I'm on the path of becoming a millionaire. That's true. I'm quite well off, I would say that. I've only been successful in trading my last 4 years. Leroux said stop getting up at 3 a.m. in the morning. Yeah, it's a sickness, man. I always get up in the morning and it's checking the PC, seeing what's going on, looking at expert advisors and stuff like that. It's driving me crazy, answering back to clients and people, and every client thinks the world's going to end at one point when they lose a bit of money in it. It's a real scare sometimes. Why only 4 years? That's a very good question. That's a very, very good question. I'll tell you why it's only been 4 years. Because you guys are lucky. You guys have mentors or educators these days. When I was trading, everyone was a scammer. I didn't know who to trust. I didn't have a mentor. I didn't have anyone to teach me. I learned it myself. I lost a lot of money, and that was my learning fee. And this is one of the reasons why today I'm doing this for you guys. So you don't have to go through what I went through, you know. I ended up at the hospital once because I lost so much money. I lost $16,000 in about 38 seconds, 39 seconds when I looked back at it. And I thought I copped a heart attack at the age of 22. I went to hospital, and I didn't get a heart attack. It was just anxiety, thank God. And the nurse wrote down, you know, what happened. I lost some money trading, you know, shares and currencies and stuff. It was really currencies. Anyway, and they were like, okay, investor lost a bit of money. That's what they wrote on the report. Anyway, when the doctor came and asked me and he said, how much money did you lose? You know, 2,000, 100 bucks, 400. I said $16,000. 16,000? How long? How long? And I said to him, about 38 seconds. And he goes, I don't blame you being here. So I paid my lessons. Like when you go to school, you have to pay for your school books and lessons. I paid my lessons, and currently to this day, I still don't have a mentor or someone that I follow. I follow my own strategies, my own methods. So I've done the hard yards. You know, you reap what you sow, and that's what's happened now. And the money that I've lost was money that I put in that was given to me in inheritance. I wish I had that money at this point of time in my life where I would have transformed it to millions overnight, put it that way. But now I'm pretty successful, and I'm on the path to doing what I want to do. That's for sure. And helping people. I got into this industry actually by accident. I was forced to get into this industry. In financial markets, not exactly what I wanted to do in life. But I'm good at what I do, and that's why I stuck with it. And sometimes, you know, life's not all about the roses you smell. You know, it's about how good you do things, and I believe I'm good at what I do, and that's why I stuck with it. Lyrics, every hour I trade, I will study or read trading books for 3 hours. That's how I started. Yeah, I did a lot of that as well. Read heaps of books, but man, it was just information overload. Just understanding like other people and doing things, you know. You should see my monitor set up at home. I'm at FXTG at the moment. My monitor set up at home is I've got an 8-screen monitor, man. And do you know how many screens I use out of them? One. I used to be so fanatical looking at every single screen. Now I just use one screen, and I don't, you know, it's just all bullshit sometimes. Yeah, you know. I went to New York and I worked the Merrill Lynch trading desk. I was there. And Bank of America trading desk it was actually now because they took over. And everyone's using all these screens, 3, 4, and I was like using one screen. They're like, what are you using one screen for? I was like, dude, don't tell me what to do. You know, you followed some other mentor that you've paid $8,000 to, mate. I followed my own mentor where I've lost, you know, thousands of dollars, and that's myself. So I put in the money, I've lost it, and that's why now I can make the money. You know, and it's just taken a period of my time where, and not just that, I've been involved in the markets now for such a long period of time that I've networked with people. I understand who does what. I know the channels to meet certain people, CEOs of companies, traders, investors. There's a lot of them that I know now, and a lot of wealthy people that I know, and I guess I am actually a millionaire when you think of it. Like my property, my cars, money in bank. Yeah, I'm a millionaire. You could say that. I can say that. But $1 million sitting in the bank? No, I don't have that. Not just yet. And do I want $1 million sitting in the bank? Probably not. I'll probably spend it. I like buying things. I like buying my wife, you know, things. I like buying my son something. Buying a new car, things like that. Or I usually invest it. I wouldn't have $1 million sitting in the bank. Remember, only 5% make money, 9% lose their money in trading. I've got another saying there, Larooks, but you're quite honest. I've got another saying. I say 95% money, 4% lose money. No, I say, this is what I actually say. I say 95% make money, okay? 95%, sorry, lose money. 95% lose money. 4% make money, 1% lie. That's what I say. I used to say 1% break even, but I think 1% lie for negotiation purposes. Not to lie for because they're embarrassed, but for negotiation purposes because their wife found out that they lost some money. They're like, no, we made money, honey, you know. So that's why, back to the point of here, I'm just want to give you guys like a core structure that you can use to trade. I mean, like, I can show you some wicked ass trading, guys, and you would freak out. Like certain indicators, I might even have them saved here. Like indicators like that, you know, where you guys are probably looking at this chart going, what the hell are you doing? What do these white mean? What does that mean? What do these fractals mean? You know, that's another trading method that I use. But, you know, it's the way it is. It's like, I won't get into something like this yet with you guys. This is very, very technical. But I use so many indicators and so many things that I can trade. But I've got over 30 trading accounts, put it that way. And every single trading account I use for a different strategy. I don't get them mixed up. Some are with the same broker, I just got sub accounts with them. Any other questions, guys? Yeah, lyrics is interesting. Any good robots? No. That's the honest answer. No, I can't find one. And still on the robots topic. I'll tell you the truth about robots, guys. Robots are programmed to make a bit of money at the start, but they'll burn your account. You'll learn that after a while when you keep getting them. It's good to find a good signal provider, a good signal provider that does live trading themselves and they've got a good track record. Someone that you know that's got good experience in trading, that's got like a trade copier that you can put on your account. That's a signal provider is good, that's always watching the market. Don't know much about eSignal. Don't know much about them. I've got a signal company that I use, but obviously I don't advertise it around. It's my own. Another question I had here: do you use different platform for trading accounts? Yes, I do. Certainly do. If I'm trading news, I can't use MetaTrader; it's a bit too slow, so I would use like web trading or something like that. But different trading platforms. The best average platform is MetaTrader. Probably one of the best platforms, to be honest with you, and you can do everything with it. It's pretty good. And when MetaTrader 5 comes out, it's even better. It's in testing at the moment with some brokers, but when that comes out, it's so much more efficient to use. But MT4 is really good. Okay, any other questions? Or anyone want to have a discussion with me, feel free, let me know. I'll unmute you. Okay, looks like there's no more questions. Let's wait a little bit more. Thanks. No worries. No worries, Mark. Okay, guys. Well, it looks like that's it, unless something pops in. I'd like to say big thank you to everyone, and I hope you have a good New Year start, and everything works out the way that you want this year, and follow your dreams. That's definitely something you got to all do. Make this your year, and just do what you want to do. Thanks, man. Appreciate it. I've seen you around, Little Rooks, a few times in the webinars and emails and stuff, haven't I? Yeah. Yep. No worries, Mark. All right, guys. I'll hope to really see you guys next week. If you want to get in contact with me, you're more than happy to through FXTG, obviously, if you want, and any other means that you can find. I don't know, Google me or something. I'm more than happy to help you guys anytime you want. Okay? All the best, guys.